Okay, here we will again continue with doing your company research using the resources provided by the OC Tech Library. And here we were on the Edgar site, and we were taking a look at the consolidated income statement of General Motors. And we were talking about how you can take a look at the 3 years that they show, and you can see that 2017 and 2018 that they had $133 billion of sales of cars, and they dropped down by $11 billion in 2019. You might want to question, why did that happen? Okay. However, their bottom line net income in 2017 was a loss. See the parentheses, that was a loss. Okay. Whereas in 2018 they had $8 billion of net income. In 2019, even though they had $11 billion less in sales, they had almost $7 billion in net income. So you would want to try to figure out, well, what was happening? How did that happen? Okay, so here was their earnings per share. And so for 2019, there was $4.62 per share. And again, you don't add the 6 zeros to that. Here's comprehensive income. I'm not concerned with that. You will learn more about that in Accounting 202. Okay, here's the balance sheet. And this is a classified balance sheet. So we have our current assets, our non-current assets, current liabilities, non-current liabilities, and then our equity will be at the bottom. Okay, so in cash, they had, and again, this says in millions, so $20 billion in cash. That would be nice to have, wouldn't it? And we have $19 billion in cash December 31st. So that's not that much of a change. Okay. Oopsie. We would want to maybe take a look, however, at property, equipment on operating leases, these kinds of things. If they're expanding, those numbers will have gone way up. It doesn't look like they did. Balance sheet looks very similar 2019 than it did 2018. Okay, current liabilities, of course you'd be interested in how those have changed. And once again, doesn't look like there's huge changes on their liability side. Here's their equity. They have common stock with a 1 penny par value. Okay, and they have additional paid-in capital, so that's our PIC account. There's our retained earnings and various other things that we haven't learned about. Okay, and of course, their total assets equal their total equities. Here's the statement of cash flows. So here's our net cash provided by operating activities. 15 billion. It was 15 billion in 2018, 17 billion in 2017. Okay, so fairly similar to the previous year as to how much cash that the operations of sales are bringing into the company. Okay, here's our cash flows from investing activities, and we see that we have a lot less cash that's going out. These have parentheses, so that's like brackets. that tells us it's a negative number. So we're spending $10,899,000,000 of cash on investing activities. But the previous year we spent $20,763,000,000. So you could go through here, you see one of these biggest ones, this one right here, purchases of finance receivables. Okay, so that's where they're taking on receivables from other companies. Okay, here's our cash flows from financing activities. And again, they spent $4,677,000,000 on finance activities. Biggest number there is on, let me see here, it's their proceeds from issuance of debt. So they issued probably like bonds and notes and things that they issued, and they received $36 billion of cash. Okay, but at the very next line they say that we paid out $39 billion to pay off debt from previous times. Okay, here's our equity, where they've cut it down into the various sections like common stock and PIC, etc. Okay, when you go through the notes to the financial statements, you're going to want to take a look at a couple of particular notes. Okay, so here you see the notes to the financial statements. Now, note 1 just gives some general information, and note 2 are certain accounting policies. So if they use FIFO versus LIFO, that's going to be in note 2. If they use double declining balance for their depreciation instead of straight line depreciation, that's going to be in note 2, okay, etc. And a lot of these notes just give a lot more information about stuff that's on the financial statements. Now, one that you're going to particularly want to look at is down here, note 16, commitments and contingencies. If there's a lawsuit, any lawsuits that haven't actually been finished yet, so we don't know, the GM doesn't know if it's losing or winning or whatever, but they have to make an estimate of that, and they have to talk about it so that you know that at least it's happening, even though it's not on there. So here we go. And here they're going to tell you about various litigation that's going on. You could read through that and see if any of this thing causes you to feel like, maybe I don't want to invest in GM, or maybe I do. Okay? So you would want to definitely take a look at that. All right. Sometimes this supplementary financial information can be helpful as well. Sometimes segment reporting that divides it out into different segments, and sometimes that can be helpful as well. Okay. So we're all pretty good there. You're going to want to also take a look up here, item 7, management discussion and analysis. This is the MD&A, and we've looked at that at a homework for that fictitious Sage company, and you had to read through the MD&A. Okay, so that's on page 19. You would definitely want to read through that. The MD&A is management trying to make sense of all of this stuff, and this can be very complex stuff, and management's trying to put it in a way that you, the average investor who's had some accounting, you're expected to have had at least enough accounting, to get some idea about what's going on. And then this MD&A is their way of telling you, in simpler words, what's happening. So you would probably want to read that. Okay? Now up toward the top, let's see. Okay, I think we're probably okay with the rest of it. Okay, so if you would at least look at the financial statements, look at a couple notes, look at the MDA, you would be in reasonably decent shape. Now you can find that same stuff elsewhere. Okay, so here's gm.com. Okay, if we go to their website, and they have right at the top a thing called investors. Now, some companies, you got to go down to the bottom, and it's going to be buried down in here somewhere. And again, they have an investor section down here. But you want to get into the investor section. Here, they're showing you some basic information, what the stock price was today, that it went up by 0.8, and the daily volume of shares that sold on the New York Stock Exchange of GM stock. Okay. Here's some investor news. You might want to take a look at that. Of course, I don't know if they would put on bad news. Okay. Here's some events that they are putting on. Okay, here is their SEC filings, which we just got done looking at. They're a public company. They're required by law to put their annual report onto their website to make it available to the public. Okay, here is report. Okay, this is just another copy of the annual report. Okay, and so there's many ways to get to the annual report besides looking at the 10K on Edgar. Okay, so back here, again, how the market works. Also has some basic information. That's a good place to start. And if you get to a number of companies that you're thinking about looking at, and once you do some basic research on there, you see one kind of stands out that says, wow, this one, I think this one looks pretty good. I think this is one I want to trade in, and I want to do more research in. Okay, and so then you would go here into your LibGuide stuff and do more research. You're going to write your paper based on this research, and let me know. You're going to need to cite where this information, if you tell me the information, where did it come from? Okay. If you have any questions, be sure you can always go talk to your librarian, Mr. Hall, or you can talk to myself.